Hey guys, Mike here. So another big week in the books, and there's Tesla and some other stocks going crazy yesterday. So we'll get into all those tomorrow and why that happened when we set up the week. It's going to be a big week ahead with CPI and stuff. But today we get all your questions about SMCI, UnitedHealth, Nike, Mag 7, Google, Apple, all kinds of fun stuff we're going to talk about. I'm also going to talk about where I think there's some people that are a group of people that is in America that are about to get shafted and they don't even know it. I really thought about this the other day and I want to hear your opinion on it, but I'll tell you what I believe in the one of the questions here today, and we'll kind of elaborate on it. But yeah, I think they're about to get really shafted, and I feel kind of bad for them actually, but then again, not really, because most of them, this is what they wanted, so they're going to get it. So we'll see what happens. So anyway, first question here says, what are your opinions around and what does history suggest on a second 20% pullback later this year? And I believe you must be referring to this chart right here we talked about, where you kind of get this fake 20%. We don't close down 20%, so it's not actually a bear market. And again, we went down to like 20 and a half, 21 through the day, and then pull back up about 19 and a half down, or what is that, 18.9 or something. And you can see when that happens, again, there is no red on this chart, right? There was no other lower low that happened. In 2018, we went down, I think it was 12%, came back up, rallied, and then went down 19.8. But all the other times, like once we were in a bear market, like we were in the bear market, okay? It came down and set many new lower lows once we went into it. And if you look at this chart, it's kind of crazy. So this is now, this is 2025, and right there I copied 2018. I want to kind of lay it over and which lets you see how similar this is, because in 2018, remember I talked about it coming in the year, how this would be like more like a 2018 type of year, because that's when we had another trade war. But when you look, obviously the reason why we had the quicker drop this time was because he held that thing up about the tariffs and people just flipped out. But when you look at this, when we lay it over, that big drop, okay, and the rally back up, they're very, very similar. But when we lay them side by side, you can see how similar things are right now. Again, history doesn't repeat, but it rhymes, right? There's the 200 rejection, came down, rallied back up a little bit, which is what that right there is, as you can see. Then we had capitulation down on both sides. It took longer in 2018 because he didn't hold that board up with those crazy tariffs on it. But then you see the rally back up, and, you know, obviously you had that 10% day, which nobody really expected that, but that's what happened. But again, when you look at the trajectory and how it's coming up here, what are we fixing to do? We're fixing to test that 200 moving average, supposedly. Okay, you think we would get all the way up here and test it. Again, the Qs have already rejected multiple times off 200. In 2018/19, this is what happened, right? We came up, rejected, sold down, came back over, tested the 200 and took off, and then ended up dropping another 8% after that in May. And so I can't think of a year where we did not, we faked the bear market, we down 19%, as I showed you, and then all of a sudden dropped 20%, you know, rest in the at the end of the year, which of course is what Jim Carson was talking about. He's talking about in probably third, fourth quarter, that we end up dropping like 35, 40%. And it could have happened, of course, because how it happens is if these tariffs stay in place and they actually have a really negative effect, because remember, we've never gone through this before. Okay, we haven't tried to close the gap, or I'm sorry, the budget deficit in 25 years, right? It's been 25 years we had a balanced budget. We've never tried to raise a bunch of revenue through tariffs before. And so, and again, we never tried to renegotiate 120 or 200, how many trade deals it is, I don't even know anymore. And so we've never done it before. So we're going to get to see, right? Scientific experiment. So we'll see if he's right. And I'll tell you what, I mean, look, I read a lot, watch a lot, because I have this channel, really, but I also like to stay educated. And usually when a lot of people think something's going to happen, it usually doesn't happen, right? And so I'm telling you, the narrative is that if the tariffs stay on and we don't get something worked out with China, then yes, we're going down and we're going to retest and break probably that low we had there in April, okay? So that's kind of the narrative. But if we get something worked out, then, you know, whole different story. So, but it's going to take something different. I mean, so that was a shock and awe moment, right? When you held it up and the market just plummeted that fast. It was one of the quickest like sell downs you can get. And so, you know, we're going to see something, whether it's you go into the markets and stuff's not on the shelves anymore, can't find, I don't know, birthday stuff, can't find, you know, whatever holidays are coming up, stuff for that. That may get people worried, but more importantly, how it's affecting the small business. That's what we don't know. Remember, the S&P companies, all of them, 500 companies, make up a small percentage of jobs out there. Most jobs are from small companies, and these are the ones that don't have any of the waivers or anything. They're not benefiting at all from these tariffs. They're getting hurt, right? Because their margins are much smaller and they can't really pass it on as much to the consumer. And so that's what we got to see. That's what we got to find out. Are they going to start doing layoffs or not? Right now, we're not seeing it in the unemployment data at all. Plus, we never had a government try to also do what? Lay people off at the government level. It's been a long time. So a lot of stuff going on. So we will see. Now, Dr. Marcus here says, I understand how tech in general may be seen as high risk in a bear market or recession, but why are the Mag 7/8 considered risky as well? For at least 20 years now, the big boys like Apple, Meta, Microsoft, Google, Amazon, perhaps even Tesla have just been growing and are cash printing machines. Seems to me these big boys are as safe as it gets. I'm not saying not to also be in safer stocks like Walmart or KO or healthcare. I'm just saying it seems surprising that the big tech plays still actually go down as much as they do despite their monumental strength and size. And there's really two reasons they go down. One is because of their weight and size, so many pension funds, everything else, the stock buybacks, their valuations, because their price keeps going up and up and up, get stretched, right? It's a premium. Okay, there's a reason why Warren Buffett said, I'm out of Apple, right? And sold boatloads, right, of Apple. There's a reason for that. So that's one reason. It gets stretched up here like a rubber band, okay? The other reason is everything sells off in a recession. Like, no matter what it is, everything goes down. Everybody cuts costs. And don't forget, what a couple of the Mag 7 make their money off of? Ad revenue. Once one of the first things gets cut, when we even think we're going into a recession, ad revenue, all right, marketing, that kind of stuff. Because sales are going to slow down. And so that's why you see them go down. It's like anything else. They aren't, and there's not many stocks that don't go down. Even the things we need at Walmart still goes down in a recession. The stock still goes down, even though people are still going to be going to Walmart, right? I mean, healthcare stocks still go down. They just don't go down as much in a recession. Now, next one, Mark says, what do you guys think of the impact to Google from Apple decision? This is a huge detriment to Google. To me, the biggest threat to Google is the AI. Now, Apple wants to do AI, but it's already the existing ones, right? So ChatGPT, you got Amazon, for example. You don't have to go to Google to search anything for Amazon. You just go straight to the Amazon website. So anything that would take traffic away from Google, right, and Gemini is a threat. And so, which is in a way a good thing, because what are they fighting right now? An antitrust case saying they have, a monopoly on the search engines. Well, I don't know about you, but everybody around me, like I'm always late to the party. Everybody around me uses ChatGPT. My wife uses it. All our best friends use it. I'm like, really? So of course I had to start using it. I'll be honest with you, I wasn't that impressed with it. I know a lot of people are. I try using it for thumbnails. It's a disaster. But again, is it? I try to use it for other things too, and it wasn't even accurate. I don't understand why everybody makes a big deal about it, but. Maybe it's good for contract and stuff like that. But I even tried using it to try to help me with my morning news brief, and I got the data, and it was wrong. And I was like, forget this. So, I use it for other things, but that's the big thing. And what is the young people using? I don't know. I'm not young. So let me know if you're young. Do you use ChatGPT, some other kind of AI platform, or do you still use Google? That's the big question, but that's the big threat. So if Apple does finally get Apple AI going, okay, then yeah, it'll be a threat for sure. There's no doubt about that. Because right now, Google pays Apple about $20 billion a year to make them the default search engine on there, right, on their Apple products. So if they lose that, I mean I don't know how that's not a big threat, to be honest with you. Now, next here says, hey Mike, could you look at Nike stock? Looks like it's in a buy zone right now. Has been getting no love. That's for a reason. And from what I searched, only 25% of their goods is made in China. The other 75% is spread out in a couple other countries like Vietnam, which surprised me. Obviously, tariffs are still affecting them, but as I've learned from you, it doesn't have to make sense for the stock to go up. All it needs is some institutional buyers. Yeah, it's true, man. Everybody seems to love Nike stock. I mean, they got a lot of problems. But remember, we've seen this chart before. I mean, just think about this. This was 2023, right? 2023 and 24, the S&P was over 25% each year. What did Nike do? Well, we won't take this latest sell down right here. We'll just go through 24, and yeah, down almost 50%. So, I mean, this stock right here is a mess and falling out of this channel right here. But again, people love Nike because it's Nike, I guess. I hadn't owned a pair of Nike shoes in 30-something years because I refuse to pay those prices for it. I think it's ridiculous because I know how they make them and where they make them. And so all you got to do is put an anchor VWAP on this thing. I've showed this time and time again. Loves these anchor VWAPs, whether it's from earnings, whether it's year-to-date anchor VWAPs, all that stuff. What do you see? Rejected all the way down from that earnings drop. Rejected all the way down. Now what's it doing? It's testing it. And so you go anywhere up here, you can see when you break above one of these anchor VWAPs, it usually heads to the other one. That's what usually happens. And once it breaks it, see you later. The anchor VWAP, you can put it on Nike, and it's just almost perfect. Now, looking at this thing right here, hey, what do I see here? I see higher lows on the daily, and I see a level being tested around 58, 55 right there. So, when you look at that, looks like it's trying to get ready to break above and get above the anchor VWAP. Good chance it closes that gap. Does it make it to the other anchor VWAP? That's what we got to see. But Nike has a whole boatload of problems, not just tariffs, but growth, a face. They don't have Michael Jordan no more, man. It's just the way it is. And so the younger generations are shopping elsewhere. Again, you can say it's a rising wedge if you want to. They can drop some more, of course, but right now it looks like it keeps testing, and more it hits that wall up there. You could see a breakthrough, finally, especially if you hear some crazy news out of China this weekend. They even cut it in half, the tariff or something. So it could go to 65.29, which closes that gap, and also hits that anchor VWAP right there. So anyway, that's Nike. And then I got a couple requests for UNH here from Brent. Also another one here, you quickly get UNH this weekend. Used to be a somewhat heavyweight in the index and seems to be around some of the support from 2021. Yeah, this one's been crushed. Again, it's in healthcare, but it has a big exposure to Medicare Advantage plans. And of course, right now you're seeing they lowered their annual profit forecast, which is never good, citing higher than expected medical care costs. And they better hope, Medicare reimbursement. It keeps getting taken down every year, lower and lower and lower, which doesn't help them. But you can see, this thing has just been wiped out. I had two areas up here which were support, went right through them. It's a falling knife, what it is. People are trying to get in this thing. You can see there's all the moving averages, even the 200 week, way below it. All right, $500 is a key level. That'll be super, super resistance when this thing comes back up. But you can see it's in a volume gap. When you look at your volume range, volume profile, there's not a lot of support right here. It could get a bounce. Again, this is a weekly chart, so it could get a bounce here, but it can also absolutely go lower. At some point in time, you're due for a bounce. You can only go, because this thing is definitely oversold. So at some point in time, you would think you're going to get a bounce, but it is in that gap. So it can continue to come down right there where you can see kind of support is not 379. That's a little bit of support. But when you start scrolling out, and look at this, somewhere in the neighborhood of 355 is where it could actually fall to, and where that resistance turned into support. It could do that as well. So if you're a DCAer and you love this stock, sure, maybe, again, it's not financial advice, do what you want to do. You can start DCAing in, understanding this thing can continue to drop down to 355. Again, we draw our fibs, which I love more than anything else, and I come all the way down to the 2020 crash. It is in a discount. And if it gets down to that level I just talked about, it'll be in the golden pocket. Okay, and you normally do get bounces at some point in time, but this thing is just, what a mess right here. And the biggest thing about any healthcare stock right now, pharma stocks, insurance, all that stuff, I just don't know what they're going to do at the government level, right? Because they're searching out fraud, searching ways to cut costs and everything like that, and they're so exposed to Medicare. It's kind of like any of the pharma stocks. What is the new health secretary going to do? Nobody even knows yet, right? So we got to see. And so, again, look at those levels right there if you want to, 355 to 381, somewhere in there. You would think you would get a bounce or at least something. But here's the thing. You don't have to sit there and catch a falling knife. You can sit there and look on the lower time frames and just try to see if this thing can start building out some structure, a base, like a rounding bottom or something is what you're kind of looking for. Because unless they get some great news, you can't imagine a V-shaped recovery on this thing, right? It's not a tech stock. And so, again, it is a big insurance company. It's had a lot of problems. Obviously, the CEO, we know what happened to him and all that crazy stuff. But you see what I'm talking about right there in that area. And you can see we go to monthly. I like big fair value gaps. And there is a monthly fair value gap there as well, which is also in the golden pocket area. Again, it's a monthly chart, so you'll run into some support right there as well. So if it does come down, that's an area to look at. That's a big area, which, man, if it goes down there, holy moly, that would be just unbelievable drop. So that's my thoughts on UNH. Next one here says, what are your thoughts on SMCI? SMCI, obviously, accounting issue. We already know about that. They ended up before earnings even cutting the guidance. Okay, so revenue now for 2025 at 21 to 22.6 billion. Previous was 23 to 25. Cut their EPS by a country mile. Now we look at the chart. You can see right now it's holding on to its 200-week moving average. All the other averages are mostly curled over at this point in time. Kind of consolidating here. You can draw a trend line there if you like. We'll put a couple in there as well. I'm gonna take all this down. But when it came down right here on the previous accounting problem issues, you can see it hit into, that's a weekly fair value gap, got a nice bounce, came down to another weekly fair value gap, got a nice bounce, and now it's coming down into this area, 31.90, 31 bucks, somewhere in there. And it's holding. It is holding. And again, it does provide a product that, people need as part of the AI story and all that good stuff. And right now it's just in this triangle. So it's kind of just wedging right here. So again, if that breaks, then you're going to be heading down to 28. Then you're going to be heading down to the teens if it keeps going. But it has room, obviously, to move up to 50, 54 bucks at the top of that trend line. If you break above that, you can go to 67. And that's pretty much where you're at. I mean, don't complicate it too much, but you can see the levels. And you know, do I like the company? Again, it's another one's companies. When you can't, this is the second time you've had accounting issues, you got some major problems, man. This is the second time they've had accounting issues. I mean, that is just crazy. That tells you something is really wrong with management when it comes to that stuff. And all of a sudden the guidance is getting knocked down. So, you know, we'll see what happens. You can see there is a weekly fair value gap above. There's a weekly fair value gap below. So you kind of just jam between those right there, between 25 and 54 bucks. Right there is your levels to watch out for, whether it breaks down or breaks up. Now, next one here says, I keep hearing different answers on who pays these tariffs. We're implementing. Do you know who actually pays the tariffs, Mike? Is it us, the importer, or what? Well, trust me, I have read multiple studies on this, and believe it or not, it is true. When it comes to what time period you're looking at, that will tell you who pays the tariff. Because at first, when you look at it, remember Walmart, what did they try to do? They tried to get their suppliers over in China to cut their cost, right? So that way they could go ahead and take on more of that tariff because they would have cost cut over here. And China said, absolutely not. And so what normally happens is you have companies that are large. They're going to try to get the supplier to cut their costs down. So therefore the company can take on more of the tariff and not pass as much on to the consumer, right? So it's kind of like we're just balancing things out. The smaller companies are screwed because they don't have, you know, enough power to get their suppliers to come down, right? So then they'll try to eat as much as they can a lot of times and then pass the rest on to the consumer, okay? So you got three different parties that could partially take on part of the tariff. You know, say it's 10%, say the supplier cuts their cost down 3%. And then the company says, okay, cool, we'll take on 6% of the tariff then and pass the other 4% on to the consumer, right? And it depends on what it is. Like I'm talking about with aluminum bat. Some items are going to have multiple tariffs on them. Aluminum bat is going to have an aluminum tariff. It's going to have a fentanyl tariff because it comes from China. And then also it's going to have whatever the other tariff is on China, right? So it depends on where it comes from. So it's all over the place when it comes to tariffs. But that's you know, that's who pays the tariff. That's just the truth. It is a consumption tax, okay? Because you can avoid that. The reason why it's a consumption tax because you can avoid it by not buying that product. I don't have to buy an aluminum bat. Therefore, I can avoid all three of those tariffs. But the people who are going to consume, which means buy that aluminum bat, are going to take on all those tariffs. That's just the way it's going to be. Now, they don't know they're paying tariffs. They just know they're paying the price. But the company is going to have, especially small companies, are going to have to raise their prices. There's no way around it or they're going to go out of business. Okay, and that's why if this ends soon, then you really won't see a big effect. If it drags out, and it seems like the bottom line is 10% no matter what, no matter who you are. Now, I will say this. I was thinking about this. Let me get your opinion. So I told you I think there's a group of people that are fixing to get really screwed, to be honest with you. Excuse my English, but I think this is going to happen. I mean, I don't know. Where's my stick at? I don't know what the size of this stick is, but I'm telling you, I think there's a group of people that are getting ready to take every inch of it up to you know where. Because, you know, we're talking about tariffs, right? So tariffs is a consumption tax. So who's that going to affect more than anybody else? Somebody making $30,000 or less, $100,000 to $150,000, or say $500,000 to $1 million. Who do you think is going to affect more? Well, of course, it's going to be the people 30, 40, 50,000 or less. Okay, they don't know how many kids they got. They know it's a couple, is it a single couple? The reason why is because you've heard that stat, like 47% of people don't pay federal taxes. Well, it's actually not true because 20% of those people actually do pay. People have to pay FICA, right? Social Security, Medicare type stuff. And so it's probably more like, honestly, 30, so about a third don't pay taxes, but they don't pay taxes because they're making them money, okay? And they get full, the child tax credit, all the deductions you get, they get the full freight on that, okay? As you go up in income, that stuff, what you get to take, it decreases, right? As you go up in income level and eventually phases out. But, and then some people get paid to live in the country, right? And so, that's how that works. So they're going to have to deal with that. And then also, these tax deductions, which I'm looking forward to seeing how this works out, because the other thing they're doing is they want to cut Medicaid. Well, in Florida, for example, I had to look this up. It's income based. Like as a married couple, you can't make more than $60,000 and get on Medicaid. And as a single person, it's around $30K, give or take, right? To be eligible. If you make over that, you're not eligible in Florida. So I think every state's different. It's a state-run program that's funded a lot by the federal government and stuff. And so, but they're about to, they're trying to make massive cuts of that to pay for these tax cuts. Remember, we're talking about trillions of dollars in extensions and then stuff they want to add on, right? So I was thinking about that. I was like, wait a minute, they're doing no tax on tips. And what surprised me was, if you had to guess, how many people, there's 164 million workers in this country. How many workers out of 164 million you think actually make tips? And what surprised me, may surprise you, just think about your answer now. The answer is about 4 million. That is it. That is nothing, right? I thought, wow. So only 4 million, and so if they do no tax on tips, well, okay, cool. But here's the other thing. I was a restaurant manager for a number of years. My wife was a bartender and a server in college, so we all worked in this industry. When we go out, we pay more than most people do, right? Usually they want you to pay 15%, maybe 20%. We always pay like 25% because we know, or more if they're really good, or more because we know we work in this industry. I saw it so many times. Some people pay no tips. They don't pay no tips. They don't put tips down at all because most people don't understand that servers, it used to be this way, it may have changed, only made like $2.13 an hour. What do you minimum wage, right? And then so sometimes they get minimum wage on top of their tips, so that's it. So their hourly wages are nothing. And so they need the tips, okay? But imagine, you got those people, then you got people with tip. Now I'm thinking to myself, I wonder, out of curiosity, what would you do here? So now let's say they pass that. And so tips don't have to pay any taxes anymore. Would you still tip the same or would you tip less? And if I'm being totally honest, I got to sit there and think if it's an outstanding server, I'll go ahead and pay the same. But me and my wife making up for other people not tipping anymore, I'm like, why would I do that anymore? Because now they don't get paid a tip. They don't have to pay tax at all. You know what I'm saying? And I'm hoping they put an income level on this because if you work at a 4 or 5-star restaurant, or those fancy restaurants, those servers make anywhere from $100,000 to $250,000 a year. And so if they're not paying taxes on those tips, like something is sadly wrong. I don't think that's what this is meant for. Okay, so I'm hoping there's an income level on that. But that'll be interesting to see if that has an effect. I'm curious what you would do. I'm just curious. I'm just thinking out loud here when we go through this. The other thing is, on overtime. Now this is a good one because I didn't know this. 50% of workers claim to be making overtime. Now when I worked, man, I had a job. I worked 7 days a week one time, but the other jobs, like, man, there were no way they were paying overtime. They just wouldn't do it, And so let me know if you're working overtime, but that would be a good one because that would affect a boatload of people. Even the problem is that doesn't affect who? The lower income, which is what I'm talking about, right? Anywhere from like 50K or less, because if they were working all this overtime, they'd be making way more money. Okay, but I remember I was a restaurant manager, you weren't even allowed to get overtime. Unless we were desperate, forget about it. You know what I'm saying? No way, no how, okay? And so, again, you got the overtime. Those no tax on overtime is going to affect mostly people who actually make good money. Like, man, my brother, he's a cop. You'd be shocked how much overtime he works, how much money he makes getting overtime. But again, anything for the middle class, right? So a lot of people work overtime are middle class. That's great. So that one I'm actually down for. But then, of course, with the tariffs, those folks are screwed. And remember, these are the reason I bring them up. Most of these folks, which I've been there. I was born in that. My mom always worked a minimum wage job. I worked, I made less than $50,000 going through the military, going through college. I was 29 before I found. No, that's probably hold on. No, I graduated college 20, 25. So probably 25, 26 when I finally made it over at that level. And then, of course, it kept going up. But it's one of those things where my heart goes out to them because they don't realize what's coming. I don't think. And I'm looking at this package, everything they're talking about representing. I'm going, these people get Medicaid, about to get cut. Consumption tax is going to be coming no matter what it seems. So they're about to get hit with that. Overtime, no tax on that ain't going to affect them at all. No tax on tip will affect them, but it could have a negative ramification on it. You guys in the comments will solidify that for me, to be honest with you. I do read all of them, and I appreciate all you guys who take the time to answer. And maybe I'll do a poll like I did that one time. I'll put all the answers together and figure out what percentage say yes, they're not going to tip as much if they know there's no taxes on tips anymore, versus who's going to be just tipping the same. So, and be honest, there's no judgment here, okay? I'm putting mine out there to you. So, anyway, that's where we're at. Again, tomorrow we'll set up the week, CPI and all that stuff coming out, so it'll be fun. And if you got anything out of this, please hit that like, subscribe button. As always, appreciate all you guys who watch and share the videos. And if you want to sign up for the membership, less than McDonald's combo, and that's everything you get with it. Give it a shot. And I'll see you guys tomorrow for another fun one.